Yo, what's up, man? Welcome to the show. I am your host, Marcel. Man, this is Wealthy Sibling, where we are here to do what? Change our family money story. We didn't choose to be the wealthy sibling, but we are going to become and are the wealthy siblings of the world. Shout out to all the siblings who strive to be um, better, who strive to have a life that they couldn't imagine, family probably possibly couldn't imagine, and all the other relatives in the wealthy family, right? Because we are the chosen ones. Wealthy family, wealthy sibling, wealthy relatives, man. So let's get to it. AI stocks are cracking down. Um, there's always been doubt and speculation in the market. This just depends on what sector we're talking about. And this arrow quarter is AI all it's cracked up to be? Is it going to live up to its promise? Is it worth the investment versus the economical impact, the agricultural impact that some people, because I've seen a lot of videos out there. I've seen a lot of videos out there protesting against the data centers that they say they feel, believe, and say, and some even have brought up evidence in the courts about, hey, this is how it's affecting our community. Did we think this over, right? And I, as a person who lives in a community, I can understand that. But as always, man, AI stocks are selling off, oil prices are climbing, investors are buying pieces of women's sports teams to try to maybe hedge their money from everything else. And a 21-year-old entrepreneur is reportedly opening his eighth snowball or snow cane location. What do all fours teach us about building wealth? Come on now. Why AI? Why semiconductors? Why are they under so much pressure? I really want to know, especially if you're a trader. How is the oil and foreign conflict affecting the market? Why is this even still a conflict? I'm tired of it as well. And then we're gonna always talk about, my investor insight, what options I made right now, what I'm looking at, uh, why Cal Larry and uh Irana Korish are investing in the Toretto Tempos, and then of course institutional investors are putting 2 million behind 250 million behind the creator economy. Okay, so let me give you technical insight for sure. Let's get into it. So the market is experiencing major tests of investor confidence. This is true mainly in the tech and AI spaces. The video's down, Micron's down. It's been reported. Like, I think, hmm, I think that the overall market is. I hate when that happens, but I think the overall market is expecting the more than what is given. But they are still spending money because they do believe in the investment. The AI infrastructure is creating sell-offs, they say, when investors price companies to near perfect growth, even small earnings, disappointments, delays, productivities. Like, if you don't hit all four home runs, and even if you hit home runs, one second. So even if you hit home runs, it it may still sell off either way. Now, the global conflict adds a whole nother structure. Now, we're already dealing with, like, hey, do we need AI? Do we want AI? Are we gonna have to live with AI? Okay, cool. Some people are like, all right, it is what it is. Use the tools to get left behind. Then you have the Iran war and any other foreign issue or conflict. You like, bro, come on, like one thing at a time. This is how the market is like really pacing, and even how investors are really like, bro, one thing at a time. Are we gonna have jobs? I'm gonna have robots. Okay. But no more other issues. Right? Now, the top 5 uh stocks to watch via market insight is Nvidia, right? Data center spending, chip demand, the competition of custom chips. Shout out to Blackwell, which is named after a black man. And Nvidia's fall. So is the opinion. Nvidia is falling because business is weakened or because expectations become unrealistic, right? What do you think? Put it in the comment section. Number 2 is, oh man, I hate when I do this. Number 2 is Broadcom. Broadcom does what? Supplies networking and custom semiconductor technology using inside that's used inside of data centers, right? So it supplies, tools and the metrics of the stuff that are used inside of the data center. Micron supplies the memory. So these are the components basically that build data centers. Micron supplies the memory technology that is used for AI and any other advanced computing. Netflix. That's one thing I did not look at today. But while I was off on this Friday, which is crazy. I had some free time, I should say. We may pull this up, but I do want to look at this. So let's do this. What happened with Netflix today? Netflix dropped below. I'll pull it up for y'all. But Netflix dropped below. Did they have earnings? I think Netflix either got earnings come up or earnings happened recently. Let's see. Okay. That's something we're going to have to look into. That's a big gap. Netflix Thursday was at like $75, $73. And as of overnight or up until close and dropped into the 60s. It's at 69 right now. But Netflix is holding the entertainment space. I believe at this point, even though Amazon has movies that are, you can go see in theaters and backed up, and they do have some pretty good movies there. Like, they're pretty good. Netflix has the hold over the overall entertainment space movie night. They are the acclaimed Netflix and chill. So it makes sense, right? And then energy companies, right? So energy companies share the benefit of, unfortunately, rising oil, while the rest of the economy absorbs higher costs, right? So you got to watch for, how does this Middle East conflict develop? The oil prices supply, and excuse me, guys, and all the things in between. I am currently just to get through this. I am currently in the video call till August. I got out the other media calls because they pull back. This pullback is strenuous. It is sort of unexpected because it pulled back to 99 today after it just now. I'm going to tell you too. I always say this. It just depends on when you get in, if they're going to hold out, and so forth and so on. Now, to say it pulled back to 99 when it came up from 190 is like, what? Okay, yes. If you got in at 90, great job. I got in at 97, capitalized, pulled back because swings are like the big volatility is somewhat unexpected when it's been consolidating. I'm talking about in the video right now, when it's been consolidating between 190 and 195. but things happen, right? And the overall AI crackdown, infrastructure, chips, and so forth, even affects the best companies in the world, right? Now, global causes, China's AI is building up its competition. It's always been in competition. People talk about their cars, and they were like, yo, if China's car, that car, not the Hondas, not the the other Asian developed cars, but if that car, the electric or the EV car, was drove in America, it would be a problem for Tesla. So they've always been a competitor for almost anything and everything that is advancing the global world all the time. And then you got the Middle East conflict, like I said, and this month it's Federal Reserve policies. That is something I am really, really looking into because it's definitely going to have an impact in the call that I have, any trades that you have in the overall market. Because people are already like the overall sentiment of the economy is you need to prepare for job loss and other ways to make money, right? That's why they've been talking about trades, doing things from their hand, and moving with the shifts. But if you get like a rate hike and you like they don't even, you know what I'm saying, they don't cut rates, like that's a big signal to a lot of people. And that's why we're really trying to look into what is Fed chair like really going to do. The only call I'm in right now in regards to my own individual is in the video. I was trying to keep you guys updated. Got out of all the other calls and holds because they pulled back so much. It was just like, all right, I gotta go right at this point. But that's another story. Though, let's talk about investors say, hey, I got money to spend because I'm not putting it in the market. We're gonna put it in women's sports. Okay, so Kyler Roy and his wife are entrepreneurs and philanthropists. They joined ownership in the Toronto Raptors, the Toronto Tempo, right? And I was like, a lot of people are starting to get into franchises, right? And we've talked about this before, but I'm starting to believe that these franchises are hedges. The world will continue to move around entertainment no matter what's going on. No shade to anybody that's making their money in entertainment. No shade to whatever your prices is for your concerts, venues, whatever the case is. But I do see that you're going to spend your money. That's what I've noticed. And what I say, spend your money wisely. I'm not saying don't celebrate when you get achievements. Hopefully that you do this once or twice a year. And in between those moments, you are sticking to high yield savings account, sticking to investing, sticking to real estate, sticking to growth in your small business or your business. I don't want to use small business, but your business entrepreneurship. Hopefully you're doing that as a part of the Wealthy Sibling family. Like that's what we're doing. Take everything you can to lower your overhead, lower your costs, shoot for your business, shoot for the stars. Do that. And then you go celebrate, right? But I do think that's what that is, right? Now, my question is, why buy a minority stake if you really want the whole pie? Because most people really just want the whole pie. I don't want to. Most people really never want to own a piece of the pie, but it takes a strong investor, strong entrepreneur to say, I'll take a piece of the pie because it's more than what I had coming into the game. Because coming into the game, I didn't have none of the pie. But now I got a piece of the pie, right? So with that, it's like, but and even with like the piece of the pie, that means that you aren't the sole owner. You don't have to worry about managing daily operations. You don't have to worry about like the day-to-day things when you just when the business runs itself, or the franchise runs itself, as far as Tyranno typos, right? And then for y'all, like, wouldn't you just rather own 1%? 1% sound crazy, don't it? But if your 1% was $1 million, wouldn't you rather own 1% of something that's rapidly growing versus 100% uh nothing, or that ain't got no motion? Exactly. Let's talk about my youngin who opened up and went into entrepreneurship. I thought this was really, really dope. Now, how he's got an friend, 8 locations doing this like snow cone and dessert vibe is immaculate. He's 21, right? He's young, he's fire. I love it, especially for the culture. So, introducing investors are beginning to treat creator-led businesses as real acquisition targets. A new 250 million holding company has created and acquired operations of growing economy business that signals an important shift. Creators no longer being viewed as talent hired or advertisement, right? Their audiences, their intellectual property, their products, their stuff is what's moving. So Zion Clayton provided a physical business example of the same principle. He founded the Meltdown Snowballs while still in high school. So shout out to him while still being in high school. And he's growing into operations Snowfront as mobile catering units. And he recently, drove into social media, where there was the final count to 6, 7, 8. The core lesson remains: he converted one product into a brand. Speaking of products, this is what we talk about. This is the mindset. This is why you need to go and grab you a trade I made. We need to get into it. You need to sit back and say, hey, where am I at in my financial journey? Where am I at in my wealth journey? What do I need to change as far as the wealthy mindset? Do I need to trade one of my probably few and many of bad habits to the wealthy habits? That's what we need to do. Go get your trade I made on Amazon. Wrote by me, your host of the Wealthy Sibling Podcast, Wealth Mentor. Now let's get back to the show. All right. So with that being said, a lot of owners, when they building these franchises, they realize that, bro, you need standardized recipes, employee training, inventory systems, location strategies. Like, hey, it's on the corner, it's in the middle of the street, it's on a main block. Woo, how am I going to brand as consistently as you can if you don't have a team? Marketing overall, financial controls. What does that mean, bro? How much are you spending on the corn syrup or whatever it is that you're using to make your treats, snow cones? And then from there, how are you leading your company? How are you leading your company? Location matters, location matters, location matters. And then once you keep one stream, the multiple revenues matter. So it's the storefront sales where you started, it's the mobile trucks where you started, it's catering, the events, seasonal promotions, bonuses. Woo. How are you getting in the door? How are you getting in the door? Now, oh yeah, golf club. So with that, because I want to wrap it up here. We talked about a lot. We talked about a few things. With that, if you are a trader and you're an investor, do you believe in AI? If you believe in AI, what companies are you supporting? What companies are you looking into? What companies are you investing into? Even in your long-term portfolios or Roths, I have AI companies, platforms that make and push the creator economy, all owned or in some form or some manner, right? How are you navigating the tensions that negatively impact the market? Do you truly understand options? And if you don't, you need to join my options class that airs once a month into the month of July. It's Sunday the 26th. I believe that's the last Sunday of the month. At 1 o'clock, we're going to get into it. We get into the nitty gritty in the options class because you don't spend a lot of time. You spend up to close to about an hour or so with me, and we're going to talk about, hey, what I looked when I looked into this option, what the chart was telling me. I have a chart mapped, so I review, hey, this is a bullish pattern, this is a bearish pattern, and I match the daily, weekly, monthly, and even yearly direction or trend of where could this go, where is it, if it's a shorter call, longer call, or so forth. And then, do we really believe that sports is a hedge? If you do, that's an interesting hedge versus gold. I do believe that entertainment and sports will always be around. I believe in that. Now, here's one thing that's not common, that sounds controversial to the norm. The creator economy is the new economy. How are you pushing and installing your money into this new creator economy? And are you getting a piece of the big corporations, big companies that are pouring money into this? Creators are the new marketers. We are. And finally, man, what strides are you taking every day for your financial freedom, for your wealth journey? What you doing? And if you have no clue, grab the book, Call the Trade I Made.